All right, welcome back to the channel, guys. I want to share with you a couple of opportunities on the radar, following on from yesterday's setups as well on the pound yen and the dollar yen. I want to talk about subtle differences that basically invalidated that pound yen trade, but why we've got another setup on the pound Aussie, and I want to share with you the differences that are going to allow you to maintain the high probability side of the market instead of taking those low quality trades. And I also want to share some tips with you on identification of structure and some little tips and exercises that you can do to immediately enhance your trading and your structure recognition. So let's get stuck in. So we're going to go into the markets now. Let's just take a look at the Aussie dollar now. So if I just go out to the daily, this is the channel we were looking at yesterday as a bearish breakout. Now, I said in yesterday's video or yesterday's live room, I said I don't have a strategy that will allow me to trade that on this particular pair on this particular time frame, but it has played out, or it is playing out at the moment. So it looks like we could get that break to the downside out of that channel today, but we can see a clear breakout of this channel. One of the things that I got a question yesterday saying, well, how do you identify the trend, and what's a good way at practicing identifying trends and structure and things like that? The best way to do that is to scrunch out your charts and practice seeing rotations in trend and new structure highs, new structure lows, but also drawing in structure. So a real simple exercise you can do is to scrunch up your chart here, bring on a trend line and just start anywhere. And all you're doing is drawing on the new structure low outside return, 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 right? And you're just doing this so that you're identifying when the break and closes below are, and when we don't violate a previous outside return, therefore it's a valid outside return. So new structure low, outside return, new structure low, and then we get a pullback, but this isn't the outside return because this one doesn't close below this low. So the outside return in this case is a violation, which we call a potential rotation, and then we go back into trend because we close below this previous low, making this the new structure low. And then we don't violate this low until all the way down here. Okay, so we get the low here, and then this is considered an outside return. Okay, and then this, and then this, right? And then, whoops, and then we get the violation here, and then we get a higher low, and then we get a new structure high, and then we get a higher low, and so on, right? And then at that point, we're in a rotation. Another thing that you can do to really practice structure and looking at structure as well is, once you've done that, bring on your horizontal line tool and just start firing off levels of horizontal structure. So here, 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 right? And what you're going to see is, more often than not, we see support become resistance. Okay, so if you then zoom in, let's just put another one here and another one here. Let's just clone this. If you put another one here and here, what you'll see is when you zoom in now, you'll start to see how support becomes resistance, right? So we had support here, became resistance. We broke and closed below this support level, and then support became resistance. We broke and closed below this support level, and then support became resistance. And then we broke and closed below this support level, right? And then we this is where we had the rotation, so it violated all of that. And then we continued down, and look, we had this new support level, we violated it, we pushed back up, we become resistance here, here, right? So support more often than not becomes resistance, which is really handy to know, because when you're starting to look for trend setups, when we break and close below the previous low, we can start to look for a pullback in a zone of the previous structure support in a bearish trend, or a previous structure resistance in a bullish trend. So two really nice little exercises there is to, first of all, practice drawing on the new structure lows and outside returns on a scrunched up chart. And then the second exercise is to draw in horizontal levels of structure just for practicing to see where, to see how they line up. Yeah, I tell you what, let's take a look at, because we're not too interested in some of these pairs. Pound dollar, we said we were going to wait till we approached this previous high, which we ended up doing. Look at that. All right, I just want to stop the video quick just to say that if you've got value from these videos over the years in any way whatsoever, I really appreciate just giving this video a like, and don't forget to subscribe to the channel if you haven't already. Most people who watch these videos are not subscribed to the channel. So hit the subscribe button, hit the notification bell, and you'll be notified when these videos go live again. And also get involved in the comments. Let me know what you think about these videos so we can really steer it towards providing valuable content for you, because it's one thing to put videos out that I think is a good idea, but I'd rather put videos that you enjoy and you're getting value from. So thanks for watching, and let's get stuck into the rest of the video. Right, fake break to the upside. We had this big rejection, and then we did exactly the same as we approached that again. If you caught that, well done. You would have to be quite aggressive to catch it, or traded the 3-bar reversal, which I consider an aggressive play, but that's not a bad level to get involved as we drew out yesterday. Let's take a look at the Pound Aussie, because the Pound Aussie is one of those pairs that we were looking at structure, and we were looking at a break, push up and test of that resistance level, and we'll take a look at that right now. So here is the resistance level right here, and we are seeing bullish, 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 strong momentum to the upside. We know this doesn't go on forever, so now we can start looking at a nice little structure-based setup. Some of you are pattern traders, so you might be looking at this, although it's going to depend whether this hits the 50% retracement. Okay, but you've actually got a completion point of a back pattern if this hits the 50%. Okay, it's 1 pip off on this particular set of data, but it might be valid for you. And there's your aggressive entry. What I'd like to see here, remember what I said about this pair yesterday, I like to see shallow windows of entry, meaning I get a tight stop loss and good reward to risk profile. So what I need to look for there is potentially a lower time frame setup, so I can wait for, look at this is lovely. When we get this just continuous movement in one direction, we know this doesn't go on forever, and it also means that we're likely to set up for a nicer double top. So all I want to look for here is a double top, okay? The double top has to be valid, obviously, so the rules of a double top needs to be met. In other words, we have the first test already. Second test needs to test the high of the previous test but not close above it. We're overbought on RSI. If we get some nice divergence there as well, that's an added bonus. And then what we can start to look to do is to enter where we're going to enter next bar market. As long as we don't get any ridiculous spikes above, we should be able to get a nice little entry with minimal risk, 50 pips of risk, for potentially a 2.5 to 1 reward, which will be 120 odd pips of reward. So that'll be very nice. I'm not greedy with these setups. I'm in and out. It's a 2.5 to 1, tight stops, really high probability setup. Really nice little zone there at previous major resistance structure. So Stephen Woodford, yeah, that is a very, very nice setup and something that I'll be looking at later today. And then the same goes, we had the same with the pound yen. And I want to talk about the pound yen because a lot of you are going, well, look, we've put in the V exactly as you described it. Well, we haven't. And I want to talk about the differences here, because yesterday, when I went into this and I made this prediction and I said, if we get a double top here, I will be looking to enter. Some of you were like, well, we've put in the double top. You know, we've now got the double top. And I want to explain to you why it's not valid and why this is going to put you on a lower probability setup in the market if you continue to take that approach at taking low quality double tops. So here's what I mean. We needed a test of the initial high but not close above it, right? Now this candle here, which was the candle that tested it, let's just draw on the test zone. We needed it to test this zone here, right? if we needed it to test this zone here, the candle that tested it, yes, this tested it, but what did it do? It closed above it. It closed above that high, meaning this was invalid. Okay, now you could say, well, on the 60, I looked for it on the 60. Well, you didn't get it there either, because the candle, okay, on the 60 would have needed to test a tighter zone, which would have been this one. Okay, and this candle here didn't test it. And this one did, but it closed above it. Does that make sense? Is that clear to everyone? Very subtle, but that is the difference. So now the pound Aussie is looking like the nice setup. We've got the push up. We've got the bullish momentum. We could potentially start seeing a run out of steam here at this level. And if we do, we're looking for a nice little V-shaped double top without pulling down too deep into structure where our targets would be. We just want a nice little retest. If we can get the retest, hopefully we get a nice close, meaning we don't close too high, too low, sorry. And also we don't get a horrible spike, which means our stop loss has to go above the spike. And if it's around this area here, this is going to be a really nice setup. So it's shifted from the pound yen to the pound Aussie, but it's still the same careful approach that gives me a good reward to risk and high strike rate setup, good reward to risk, and tight stops. Nice setup there. That's a juicy one. And we know that if we can get involved in that, we're looking at 120 odd pips of 120 pips of profit. One other thing that you might get in this zone, this is a classic setup for, by the way, is an ascending channel. So if you trade ascending channels, you might get something like this, where we push into the zone and then we finally double top. What normally happens with ascending channels is you see this, and then 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 what happens is you get a double top, okay, and then you capture the rollover to the start of the channel. But other than that, nothing on the pound yen. The dollar yen's really a continuation of what we was talking about yesterday. We had the break and close above. We had a doji yesterday. This is a clear indecision candle, okay. And what we said is if we hold, how's price likely to get up to our predicted area? We're likely to either push up immediately or see a little pullback and then a push up, but the pullback isn't likely to come down to previous structure resistance because this pair just doesn't behave like that. What we saw yesterday, we did see a dip down, not quite into the zone that we would like, but we're still, we still could do that, still could push down into that zone. However, this higher close candle here would have been the aggression entry. That would have been where I would have said that would have been a better entry, because otherwise you're going to miss the setup. So you get in next bar market here, and obviously you're just moving sideways at the moment, but that would be your entry. We've also had a retest here, so we've had this retest. So this isn't a bad area to get involved. With still targets up at structure, or you split the positions by taking some off at the flagpole extension, and then secondary targets up at just below that major structure resistance level. And literally, it would be an at market order right now because of where we're at. So if you're using TradingView, again, buy, market, whatever your position size is, put that in and then hit buy. And again, your stops would go below this retest, or whatever your stop loss rules are, and then targets, still to target ones, 116.58 would be still more than a 1-to-1, so 115.58, and then you can either set another order for separate targets. I think TradingView has the ability to do that now anyway. If you're using MT4, you'd have to set 2 orders running in parallel, or if you're using NinjaTrader, you just split your position in half and you have 2 targets, 2 sell limit orders. These would be sell limit orders, okay? So that's the dollar yen. Not much else to report on with that. New Zealand dollar, we didn't have anything yesterday, but we've seen some movement overnight in the Asia session, seeing a rollover here. and this market is bearish anyway. So we have been bearish overall. What we're seeing is a push down towards these previous lows. So although I don't want to short it right now because the move's on its way down, in fact, I'm waiting for a break and close below this retest that we had recently before I start looking for shorts, because we had this rejection here and then we retested here and didn't break and close below. So I'm a bit hesitant to just short this as a trend trade. However, if we break and close below that zone, I'll definitely be looking for shorts, or we could look for a structure-based setup. Okay, so if you're a pattern trader, you might have a pattern in here where you're just a bit more aggressive, X, A, B, C, D. Okay, you might have that. If this isn't an X to A for you, which it wouldn't be for me, then you just look at this beautiful bearish, 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 bearish. Again, a bit like the pound Aussie, we know this doesn't go on forever. We're likely to run out of steam as we approach this previous level of structure support. And that's where you can start dropping down the time frames and looking for that retest. Look at that. All right, that is beautiful. That is screaming out, I'm going to lose momentum. And when you do, you either get a descending channel or you get a double bottom, or if you're a bit more conservative, you could be looking at a 2618 setup. So that would be a double bottom followed by a violation of the retracement and then a pullback down into the 618 retracement, and then you look to short it that way. But this is a nice looking setup for a structure-based trader. Something I'll be looking at. Really, the two trades on the radar for me are the pound Aussie and the New Zealand dollar, and they're similar trades in two separate directions, and other than that, the rest is just noise for me. All right, so that's it. So if you're interested in coming into these live rooms every day, you can come in, join us in the group, and we do this every day, Tuesday, Wednesday, Thursday, 7:30 UK time, and then we do it at 7:30 New York time as well. If you want to come in and see what that looks like, you can check out the trial at Tier 1 Trading, and I hope to see you in the live rooms. Take care.